Hey everyone, it is 11 a.m. on the last day of April 2020. So that's an awesome thing. I'm going to start out with just a reminder, Q&A buttons on the bottom. I'll do this again too as people are ramping into this webinar. So I want to start out with a shout out, first of all, to United Community Bank, Aicpa, Pinnacle, in particular, for taking on clients that weren't clients that had been running into issues with big banks. You guys have done a really good job, and PNC has actually done some of that too for us. So I want to just say thank you. Clean Juice got funded by UCB after a couple failed attempts with some of the bigger banks. So, and PNC has come through for them as well. So awesome. And evidently, Clean Juice took issue with the fact that I was plugging Lenny Boy. And so they sent Adam and me "Okay, I'll know" t-shirts. So thank you for the swag. We appreciate it. I think I am ready to tee it up to you, man. Take it, Adam.
All right. Well, I'm wearing my addicted shirt, which is St. John, and that's where I wish that I was right now, staying in Tim's place, right on Cruise Bay. Hopefully someday soon. What I did also, thank you. I know a lot of our banking partners also, hey, just due to internal restrictions within the bank, they couldn't take on any new customers. So I do want to thank everybody else too that really worked with their clients to get them funded as well. So for today, we've had a lot of noise, and we covered this in the webinar last time, but I'm going to hit on it again. There's been a lot of noise around, we're coming after you. Do you really need the money? And the reason I'm bringing it up again is that I think the noise is going to escalate even more now, because a lot of the banks are now scrambling internally thinking, wow, should we do a CYA and say, hey, if you really need the money, if you don't really need the money, you need to give it back by the 7th. So I wanted to hit on that topic because we have fielded some questions from people that have said, what do you think we ought to do? And again, it goes back to, it's ultimately, your call and what you're thinking ethically, but I'm just going to give you my take, and I will apologize in advance because if I get passionate, because a lot people that know me pretty well know that my listening filter, when I can completely have a total emotional breakdown, is when something is completely illogical and doesn't make any sense. And that's this topic. So if you think about the concept of do I know or not that I'm going to have a problem? And do I know or not if I've been impacted? I don't know how that can be provable as of May 7th, in the sense of how do I know what's going to happen in the next couple of days? I mean, all that I've got is maybe some recent past trend information to make a call on, but it would be impossible in my mind to prove in a court of law that I could have known that I wasn't going to have a problem in the future. So I just, I think conceptually that just seems like an unprovable thing. And even if you weren't thinking about it from a court of law standpoint, and again, I apologize for playing an attorney on TV, how do you know anyway? Again, if you use BGW as an example, again, we're down about 50% right now for the month of April. Probably be down some in May. I think there's a good chance that we'll swing that back around, because a lot of it's just related to getting projects to the system, related to the extended original deadline, because that's usually kind of our first big push to get stuff out the door. But then at the same time, I don't know that with certainty. Like I cannot know that with certainty on May 7th. It's impossible. So the only fact that I have available right now is that I am down, and that's probably the trend for the next month to 2 months, versus what'll happen in the fall or the fourth quarter. The same thing applies to somebody who's doing okay now. Well, again, how do you know as of May 7th that that's actually sustainable? So then you have the second. So first off, in terms of certifying, well, I really know that I'm certifying I'm impacted negatively by the virus. I think that's just an impossible test to prove one way or the other. Secondly, because again, you're asking me to extrapolate on the future based on past data, which could be good or bad. Secondly, when it comes to, and if you had other means, and this is where I get really passionate. The thing is, I really take the opposite view, in that I feel like and this is why, I ultimately believe that, hey, will this end up holding up in court? No, I don't. Because if you think about it, the whole intent behind the legislation was to have us not put people on unemployment, keep them employed. So explain to me the thought process behind, hey, we'd really appreciate it if you would keep people employed, even though you're having declining revenues, because that keeps them off unemployment. So please keep them employed so they can maintain their benefits and not go on unemployment. And in exchange for that, we will give you a forgivable loan to cover that. So all along, this was just another form of unemployment insurance at the end of the day. So I'm having a hard time understanding how, because I had other means, that I should be penalized for that. Because if I had other means and the loan wasn't forgivable, why wouldn't I have just laid off the employees and had them go on to unemployment? So you end up with the same answer regardless, which is this is a government subsidized way to keep people off unemployment. So from my perspective, when it comes to Ruth's Chris, the Lakers, Shake Shack, the facts are they actually are down and have been harmed. And I feel like the government then turning around and saying, give us our money back. Now, again, you are giving the money back, because if you didn't spend the money back, then it's not going to be forgiven, and then you're going to pay it back. So it's more around, I spent the money, but I didn't need it. And I don't understand how you can determine need. And I don't understand how you can determine how it would ever hold up in a court of law, or even make sense that because I had access to other capital, and I took the money and I actually spent it for its intended purpose, that is criminal. Because in my mind, I would have just laid them off. So thank you. I was doing you an administrative favor. And then secondly, how is this not any different from eminent domain in the sense that, when the government seizes my property for a public good, it doesn't matter if I'm rich or poor, I get the fair market value of the property. And if it happens to be that I made a huge profit off that, that's held up in court all day long. So this really isn't any different. It's basically saying, hey man, if you had the means to fund the employees, you can't have any money. Well, then I wouldn't have funded the employees. Had you not given me the money, they'd be on unemployment. So that just doesn't make any sense to me. And all it seems to me is it's more the government's way of CYing themselves because they didn't request enough money in the first place. So when I say, hey, the Lakers, should they have to give back the money? No, I don't think philosophically they should have. At the same time, for our clients that didn't receive loans because the Lakers got one, yeah, that really pisses me off, frankly. But that's not the Lakers' fault. That's the fault of a faulty appropriation in the first place. This should have been really simple math. I would have called up ADP, Paychex, Insperity, some of the bigger payroll companies, since they represent the majority of the market share. I would have said, tell me, what's the payroll of all your customers that are below 500 employees, and I'm going to appropriate, 50% of that or 75% of that. That would have been probably north of, $1 trillion, $1.5 trillion. And I recognize that may have been scary to people at the time, but that is what it probably would really take to fund the demand that's out there. Otherwise, it's just not fair. And what you see happening is that the people that are not receiving PPP funds are not going to bring people back, or otherwise are going to be laying people off. So you end up in the same result anyway. It's just a little guy laying people off instead of a big guy laying people off. So this whole thing just doesn't, it's not logical. And it seems like it's just trying to cover up a flaw in the first place. And I don't see how it could ever be enforceable or otherwise would get upheld in court. So soapbox over, Gary.
Hey, well, I'm glad you brought that up, because the reality is I spent 2 hours this morning dealing with various commercial bankers as well as clients that were, frightened by those things. I agree with your logic. I mean, common sense has to prevail here. And so the one thing that I would also say is a takeaway from this thing that we're seeing, you need to have a relationship with a good banker who is also backed up with a responsive and good bank. I think you got to have both of those things. And so we've got plenty of them. And it's not that all the big banks are bad. They've just been slower to move. So anyway, you ready to rock and roll with some of these questions?
Yep, fire away.
All right. Just as a reminder to the audience, because we've got a little over 110 people on here right now, use the Q&A button, avoid the chat. That way we've got a record of it, because we're compiling this stuff. Not that we're going to do anything big with it by any means, but it's handy for us to be able to archive and kind of bucket these answers. So first question, this is from Brenda. FTE count. If you have multiple companies with the same owner qualified for 3 PPP loans and you split an employee's pay among them, how will the FTE for each company be calculated? So she's got an example here. Employee 1 for all 3 companies at $83.33 a month or $100,000 a year, split as follows. Company 1, $43.33, company 2, $3,000, company 3, $1,000. It's the same employee. If you have 1.6 employees, does that round up to 2?
So there's 2 places that this comes into play. Remember, there's the concept of the FTE, and then there's the concept of the average FTE count. So where this would come into place would be in the average employee FTE count test. And in that case, I'm going to assume that the forgiveness calculation is going to be at the entity that received the loan level. So there's no guidance on it, but most everybody believes that that's either going to be add up the hours and divide by either 30 or 40, depending on what the final guidance is. So in that scenario, each entity would have a fractional employee. So that for the purposes of calculating your average, if it falls under the exception, which is I didn't meet the average FTE count, then, so going back to that, that means that you have to have the same basis of comparison from the beginning in terms of how you did the calculation. And we believe it's going to be an hours-based type of calculation. So then it comes back to, well, I didn't pass the average count. Now I need to qualify for the exception. That's just from what we're seeing, people on a payroll, independent of how many hours they work, because that's how you're getting the exception, is by bringing them back on payroll. Technically it's the same person. Should they count? It's a good question. We would say, well, count them. I mean, I didn't even know how I'd exclude them. So.
Next question from Brenda as well. If you use the calendar year for the loan, can you use one of the other methods for the FTE count, i.e. 3/1 through 2/29 or 1/20 or 1/1/2020 through 2/29/2020?
Yeah, so you've got two underlying things that you need to do there. First off, if you use the full calendar year and you literally just counted belly buttons, meaning whether they're full-time, part-time, and there's actually an example, I want to say it's question 36 in the FAQ off the top of my head that gets to the FTE count consideration. This didn't happen, but what was supposed to happen in the eligibility question is that it was just straight up belly buttons, no consideration of the hours. And they give a specific example that says, I've got 200 employees that are full-time equivalents, 50 employees that are only working 10 hours a week. I have 250. So if you did it that way, that was to determine your eligibility. Then it goes on to say that the forgiveness calculation itself will be based on a full-time equivalency basis, which implies an hours-based analysis like we just described. Therefore, the first thing you're going to have to do is to figure out, well, what did I actually put on my application? Was it just straight up belly buttons, or was it average FTEs? I don't think we're going to have too many issues with any clients that, if it was just straight up belly buttons, would have met the 500 anyway for this purpose. But if it was for the purposes of forgiveness, it's going to be an hours-based thing, we think, and you do get to pick the period. So it's either, relative to the calendar year, it's relative to 2/15 to 6/30 or 2019, or it's relative to 1/1/2020 to 2/29/2020. And you would think you would pick the one that's going to let you best meet the average that you're calculating now.
All right, next question is from Mike. I've got a question on payroll tax deferral. We've just started deferring employer portion of our Social Security tax. Our payroll company told us we can do this and it will not be due until 50% on 12/31/2021 and 50% on 12/31/2022. We've also received a PPP loan. According to our payroll company, this means that once any portion of the PPP loan is forgiven, we will have to stop any deferral of payroll tax for any payrolls they process after that date. But the due dates for the payroll deferred payroll taxes are already processed and wouldn't change. Seems like I heard in one of your tutorials something different, that due dates would be accelerated. Does this sound right?
So from that, this is off the top of my head, I actually thought it was 2020 and then 2021 were the due dates. But that's what I remember. I could be wrong in that. Either way, it's at the end of, December. It's either 2021 or 2020 and 2021 or 2021 and 2022. I think it's 2020. But don't quote me on that. But independent of that, the way the guidance has come out is that once you're awarded the bank has told you you're forgiven. At that point, you need to start resuming payroll tax deposits. So the only, it's all going to depend on how frequent of a depositor you are to know, well, is part of this part of what should have been, deferred, or is part of this supposed to wait? So there'll be a little gap period that exists. Now, all that said, I think I did say on an extremely early webinar that, hey, the way this reads now is that you can't do both. They came out with subsequent guidance that said that you could do both, but you have to stop doing it once the forgiveness is you have an indication of forgiveness.
All right, next question is from Rick. Thanks to you guys for all the information you've been passing along. I'm pleased to report that a nonprofit that he's on the board of, and this is an attorney in town, was able to submit a second application for PPP funding, a second application with Aicpa, and we were informed last night that it'll be funded and approved in this second round. So they still haven't heard from the big bank that they were with. So that's a good thing. Congratulations to Rick. All right, I'm going to go to the next round here. This is from Neil. We received notification we're approved for PPP loan, but the amount is not the same as we applied for. Do you have any idea why?
I've only heard of one other instance of this, and you know, the first instance is that you could have had a flaw. Well, sorry, I've heard of two instances of this. The first is you could have had a flaw in your initial calculation in the first place, and the bank just corrected it. So, you know, technically what should have happened is you should have resubmitted your initial application with the correct amount. I don't know enough about the bank's internal processes to know, all right, well, what, you know, if I made an application but I had an error on it, did I just fix it when I did the loan process? So that's scenario number one. Is it could be that you just had a flaw in your initial application that made it through the underwriting process. The second is we have had one client that didn't receive the full amount because the bank did not believe that they would be able to use the funds fully to be 100% forgiven. So they got 75% of what they applied for. That's the only those are the only two scenarios that I've heard of, is either a bank making a determination that they weren't going to be able to use it all, or alternatively, you whiffed on the application process. If you find something out, you know, please, of a third scenario, please let us know.
All right, this is from Michael. Actually, it's a celebration. Hooray, we were funded for 2 companies after leaving a big bank and moving to a small bank for PPP. I thought earlier. That's great news. Marson, we filed with Chase within the first 2 hours it was open. Last evening, we received contact that they finally submitted our application. This is part of Chase's bulk submission of 200 applications. Yeah, we've heard a couple of those, whether it be Chase or Bank of America, that they're doing huge tranches. Seems scary if you're in one of those tranches and you got, you know, waylaid on the first one. Anything you'd add to that?
No, I mean, it just, again, like what we said before, is that you know, you'll get rejected if someone else got an E-Tran number already for you from another bank. So if you're thinking about applying with somebody else, you know, now would obviously be the time, and you're not jeopardized from missing out in either case.
Yeah, I think the point that I heard kind of loud and clear this morning from a couple of commercial bankers is, you know, there's confusion by some banks saying, oh, well, we've got this number. And a lot of times it may be an internal routing number or something. What you have to know is that you've got an SBA number that's been assigned. That's your ticket. Internal tracking numbers don't mean diddly squat, from what I've heard. This is from Robert. Blue Harbor Bank is making PPP a draw program, in that you have to prove you used funds for payroll to be able to get reimbursed for those funds. They're not paying the overhead portion until after the 8 weeks ends. They're suggesting that they will only give the forgivable portion of the PPP. So there is no option for a remaining loan. Is that permitted? And if not, how can it be reported?
Jim.
No, that was Robert.
No, I'm saying Jim Marshall, the bank president.
Oh.
I don't know what they're doing. That's really interesting. They're treating it like a construction draw, and I don't. The law is silent on that. So I think what I would be frustrated with on that would be that I still had to pay the bills on the 25% piece, and I have to fund the payroll. So I could use the cash before I have to have the reimbursement. So that really seems like their own internal process, and the law is silent on whether they can do that or not. You probably would have to revert back to the loan document itself for the law. And if it says that there's something around provability of expense, and they'll fund for you, like you sign the document, as regrettable as that is, if it was silent on that, maybe you have a case. I don't know who you could report it to other than maybe the North Carolina Bank Commission. But that's the first that I've heard of something like that. It's not a super great policy, Blue Harbor, in the sense that I can appreciate worrying about the risk of the forgiveness and carrying a loan on your books that you don't want, but at the same time, it's government backed. So that seems like it's being a little bit harder on people than it needs to be, and imposing an administrative burden on yourself that you don't need.
So this is from Marson. Is there any indication we might get funded should we file with a smaller bank? So if you don't mind, I'll take that one. The only thing that I would say is, it's a crapshoot. I've heard a lot of people hear lots of empty promises and then end up with a bag full of nothing after the first round. And so I'd say I'd press my banker for an SBA number. And if you don't have that, it may be too late, but I was on the phone again with United Community Bank this morning, and I don't got a dog in this hunt, but the issue is they're the only ones still taking non-clients, and it is 3 seconds to midnight right now. So Marson or anybody else, if you're worried about that, no guarantees. They've been saying for the last couple of days, no guarantees, but they are still working hard to get some last minute frantic clients of ours, or even people that we know that aren't necessarily our clients yet. And they're working hard to get them. So Marson, if you want, or anybody else, just ping me at gfrey@trustbgw.com, gfrey@trustbgw.com, and we'll try to get you connected to Thomas McTier. So we've got a couple here from Barry. So the first question is, did I hear you correctly during the last meeting that bonuses paid to employees with salaries over $100,000 do count towards PPP spending?
So there's 3 things to be think about and embedded in that question. So first off, if someone has already made $100,000 prior to you being funded, I don't believe that even if you reduce their pay, that any amount of that is going to count. So carve that person out. The second component is, if the person is on pace to make more than $100,000, and I think they're going to make more than $100,000, and I happen to pay them a bonus in this time period, then I think it's a gray area in terms of, well, do I really know the person's going to make $100,000 or not? I don't. But, I think in that case, you probably would revert back to what was their 2019 W-2 for the purpose of the analysis. And then again, remember, this is us using our best judgment here. Nobody knows yet. This is for, if I'm trying to think through what's the forgiveness amount and what I need to do from a pay standpoint. The third scenario would be, is the bonus so large that if I were to annualize it, the person would make over $100,000, but they're not. This just happened to be a big bonus. I think that should fully count as well, but your only proof point would be you'd have to revert back to the 2019 W-2. So that last one, I feel like, is going to be a little bit of it's not that I think that it's going to be a gray area. It seems like that's going to be a hard one to I'm just trying to think through what's the evidentiary material that I would have to provide for that, other than just my good faith. If my package got sent to some central underwriting department, they said, well, hey, I analyzed this stuff out. Geez. And I'm getting a different number than this person. Well, yeah, because I paid them their bonus.
So next question, or a statement from Barry, is FYI, I read today that AICPA is recommending a rule change to the SBA regarding the start date for the 8-week period. In their opinion, the 8-week period should commence once stay-at-home restrictions are lifted, not when loan proceeds are received.
Yeah, it's a good recommendation, and at the same time, we had a call with OMB this morning, and the restaurant and hospitality lobby is pushing hard for that too, which to me actually makes pretty good sense that the forgiveness should follow when I was able, per state rule, to actually be open for business instead of an arbitrary point in time based on a first come, first serve, wasn't funded enough in the first place program, so you scared me. So I agree with that, and I hope that they do something with that.
So this is from Tom. Regarding unemployment insurance, if an employee goes back to work but at a reduced hour or at reduced hours and they're no longer qualifying for NC State unemployment insurance, will they still get the Fed $600 bonus per week?
They're supposed to, but since it's administered by the state, I'm not sure mechanically how that's actually going to work. But they're supposed to receive the benefit.
This is from Janet. Would vacation pay count with PPP forgiveness if the person makes over $100,000 a year?
Yeah, it's just whatever you paid them, independent of what was the character, whether it was PTO, vacation, tips, commissions, bonuses, whatever. It's just whatever you paid them.
All right. This person says, I think I know the answer, but does janitorial fall under utilities?
Yeah, I mean, I think it does. There's not really a strict definition of utilities, but I don't see why it wouldn't be.
This is from Josh. Can you pay seasonal employees severance out of the PPP? And if so, are there limits on how much?
The only limitation is still the $100,000 annualized. So the way it reads now, you can.
All right, next question. I received a PPP loan. At the time, I was not sure if I would receive the EIDL and indicate I had not received an EIDL on PPP application. We just received the EIDL grant after the PPP funds were dispersed. Is there anything I need to do now? I don't think there's an easy way to return the EIDL funds since the SBA website and system are delayed.
Well, so again, you're not supposed to use the funds for the same purpose or ask for forgiveness twice. Yet the way that it read, the way that the law read is that you're supposed to roll in, it's 2.5 times your average payroll plus what you've already received under EIDL is the total balance that can be forgiven, subject to the same restrictions around 75% payroll, 25% other expenses. So in this specific scenario, the math's going to be the math on the principal balance of your PPP loan. So, and that's going to be what you had as a PPP loan. So the only thing that's really going to come into play here is if there's a scenario where you spent more on payroll than you're set. In other words, if you got to your 75-25 ratio and for whatever reason that was more than your original principal balance on the original PPP loan, so you're requesting additional forgiveness, and the bank's supposed to authorize that would mean the bank would have to be willing to redo the loan documents to cover that additional amount of EIDL advance which I don't see logistically how any bank's going to do that. So I think the reality is, you got a PPP loan, that'll get hopefully forgiven. You got an EIDL loan, you're just going to pay that back over time. I don't see there's really not a mechanism to do anything different.
So this is Stephen. FYI, we received our EIDL grant yesterday. We're a small 2-employee company, so it's $2,000 grant. Good job. From Gary, if an employee leaves during the 8-week period voluntarily, for example, he finds another job, will we be penalized relative to loan forgiveness for the lower FTE count?
The way that it reads now, you would.
We got an email from HHS saying your organization is receiving this notification because we believe you qualify for additional general distribution funds. However, we do not have sufficient revenue information on file. What do you make of that? Are they saying we can submit an addendum for our loan application with additional expenses? We're a medical office.
This would be under the Medicare component of the act. So it is possible if you're receiving Medicare payments.
All right, this is from Jennifer. Hey, Gary, want to thank you and Adam for your help with this information. We applied through B of A on 4/3, dead silence until the 20th. Monday, we took your advice and applied for 3 more PPP loans through small banks listed in the NC SBA distributed funds email sent out by SBA on 4/24, applied on 4/27 to American Partners Financial Credit Union. And by Wednesday night, 4/29 had an SBA approved loan. Our new friend at APFCU said that when he put out the info in the SBA, I told him they were our first attempt to request a loan, saying that B of A hadn't submitted our loan to the SBA yet. I was told on Friday that they had, just saying. Okay, cool. Glad you got your money. Elizabeth, for the loan forgiveness, can you explain how the average employee test will take place and what time period will be used to compare the employees that we have now? Our company had less employees on 2/15 than we did in 2019.
So again, going back to it's silent on how you calculate average FTE, but most everybody's thinking that it's either going to be hours worked. First off, exclude anybody that's already full-time. And the first question is going to be, is 30 hours full-time or is 40 hours full-time? But once you got that, you exclude anybody that's full-time. And then when you look at part-time people, then you say, all right, let's add up all of the hours of part-time people, divide that by either 120 if it's a 30-hour test or 160 if it's a 40-hour test. And that's the full-time equivalent of your headcount of part-time employees. You compare that versus the same math on whatever you use for your application, or 2/15/2019 through 6/30/2019, or January and February 2020, and you're going to use, again, whatever you think is going to be the best math for you.
This is from Babette. Do you have any guidance on any limitations to expenses paid? For example, if the 8 weeks covers a period that crosses over 3 months, can I pay and get forgiven 3 months rent, provided that the total doesn't exceed the 25%?
Nothing says that you can't, because it would be impossible to come up with using rent as a specific example. Think you'd have to do an accrual basis calculation on every single expense, including your payroll. And that seems like a daunting exercise that is fraught for abuse and error. So right now we're feeling it's going to be cash basis. And again, the reason for that is that the application itself was cash basis, because it only included money that you actually paid to employees in 2019, which is not necessarily what the employees earned in 2019.
Next question is regarding reoccupation during the 56-day period. Would deep clean, disinfectant services, et cetera, count as part of the utilities, rent, telecom expenses included in PPP?
It kind of fits with the earlier question about janitorial. I would give it a shot. That would seem to make sense, but there's no exhaustive list right now. So we're thinking it's generally going to be associated with facilities and infrastructure to keep the business going, which is why the telecom sits there.
Okay, this is from Stephanie. We got notification from bank and got the SBA E-Tran number. What does this mean?
That means that you should hopefully hear back that you're getting a loan pretty soon.
That's the number you want. This is from Jan. Sorry if this has been covered already. When I'm making calculations on amounts that should be forgiven, do I include gross payroll amounts, and is employer FICA percentage included?
It's gross payroll amounts, but employer FICA percentage, employer FICA is not included.
All right, from Toinette. First Citizens Bank gave us a verbal for both my LLCs. I asked when I would receive funding. He said it's out of his hands, that he would receive DocuSign from the SBA. The funds are supposed to be issued within 10 days of my signature. Today's the 30th and I haven't received an email. If I receive the funding during the second week of May, will my deadline for using the funds stop on June 30, or will they allow the full eight-week period?
The way that we interpret the law is that your 8-week period would go beyond June 30th, because it's 8 weeks after the funding is received and the funding is available through June 30th is the way that we're reading it now. So yeah, I got to believe that you would be in a group that would possibly go beyond. That could all change, but that's the way I would take it now.
All right, next question is the amount of the payroll forgiveness only the gross payroll for the employees, or does it include matching taxes?
It does not include matching taxes, but it does include unemployment.
All right, next question. Each year, roughly 20 to 25% of our annual payroll cost comes in December on a separate bonus payroll. This drove monthly average up on our application, and when I do the math, we will only be able to use about 60% of our loan for our standard monthly payroll, leaving 15% on the table. Can I run an additional payroll period over the 60-day period to utilize this money, knowing our bonus pool will not be what it has been in past years, even if it exists this year?
Well, so that's, that you actually hit the nail on the head in that, you don't know whether or not you have a bonus or not because you haven't seen the year play out. And when you paid that in December, the employees actually had been earning it throughout the course of the year. So at the same time, what you choose to pay people is your own choice. So there's nothing that says that you can't pay something more, subject to the restrictions around, the $100,000 annualized, because who's to say that it was earned or it's not? And secondly, we've got clients that have given people hazard pay because they've been coming into work, when they didn't have to. They could have made more money on unemployment, so they're trying to juice it up a little bit. So I don't see how you could prove that, hey, you weren't supposed to pay that person additional funds. I mean, we've got a lot of clients that, same thing would apply to commission-based salespeople.
This is from Cherie. Got notification from B of A that our application is complete, but no other indication of approval or amount. Any guidance as to what that means?
I think Gary's hit it. Until you hear from somebody that you got an E-Tran number, it doesn't mean anything other than your application is complete.
Yeah, that's Russian roulette, in my opinion. I would be scrambling right now to get a hold of somebody. And this ties into that. Jennifer says that American Partners FCU is not their first bank, but they might be willing to take on new customers. They have PPP app online. They reached out to me within 4 hours. So that's great. I don't know that credit union, but that's awesome. And I do know that, UCB, United Community Bank, is still doing that. At least they were prior to this webinar this morning. And if you need to reach out, feel free to do so. From Ken, filed for EIDL $10,000 advance. Are there any other steps to take regarding EIDL, and how do I get an EIDL loan?
Having not gone through that process yet, anecdotally, I believe what happens next is you get a notification from the SBA to log in, and you've got, a loan that's put forward in front of you. What I've found really interesting is that of the folks that we know that have received loans, the amounts and the terms were exactly the same, even though they're two radically different businesses. So in both cases, it was $500,000. So there's a part of me that's thinking that they're capping the loan at 500 grand, independent of who you are. So right now, we also know that they're kind of shut down to try to get through the backlog of what they've already got. So I'd suspect that if you got the grant, you'll hear something in the future, but it's hard to say what that future is right now.
Next question is can I rehire a few days before June 30th and avoid a reduction in the forgivable amount? Do they have to be on the last payroll?
So this goes back to the whole theory versus practicality of proof. In theory, yeah, if you rehired them, they should count. In practicality, you got to prove it. I don't know how you're going to prove it unless you can prove that they're on payroll.
This is from Elizabeth. I read the list of utilities for forgiveness, and what does transportation mean? Would that include gas and truck payments we have for our crews? We're a remodeling company.
Again, on vehicles, it was only in the sole proprietor guidance. And in terms of truck payments, only the interest would count. If it was a lease, the full amount would count. It's silent on what if you applied under the business literature. So anybody trying to use vehicles as part of the utility calculation, be forewarned that that was only on the sole proprietorship piece. So it's an extrapolation to take to the business piece. That said, it's the stuff that's required to run the car. So the gas, insurance, stuff like that. I wouldn't necessarily think depreciation expense is going to count, but the other stuff to operate the vehicle would.
This is from Jeannie. Housing allowance for ordained pastors was not to be included in PPP calculation, but now I hear it can be included in forgiveness.
I don't know enough about that, but that actually speaks back to, is this money going to be taxable or not? Because if you look at the literature on, can I take a deduction for an expense for which I did not actually pay for, the only case law is or the only revenue rulings are actually related to ministry. So that would lead me to believe that you could include it in forgiveness, even though it wasn't taxable income to the recipient, because somebody actually had to pay it.
From Stephanie, you mentioned hours worked to calculate EFT. What if you don't pay hourly and you pay a daily rate?
Yeah, you just got to, again, it goes back to, you got to take your best guess then.
I think that meant FTE.
Yeah.
We're all a little dyslexic at times. I know I am. This is from Cheryl. We lost 2 employees who left or gave notice before shutdown for a move and a life change. We've been using fractional resources to fill that void. They're paid on 1099, so I can't use 1099 for forgiveness. but it's also impossible to interview and onboard two W-2 employees in a lockdown period. We can't hire and get this work voluntarily. Thoughts?
I mean, the way it reads now, you don't really have a choice other than to try to get people under payroll, however you do that. I mean, I sympathize with it, but there's really not anything else you can do right now other than try to get them on payroll, which is also independent of the 1099s aren't going to qualify for the forgiveness. So if it's possible for them to get onto payroll so that it counts for a period of time, you can try that route as well.
When we filled out the PPP application, it said number of employees, not full-time or part-time. So we counted belly buttons. 2 of our employees are still part-time, and we still have the same amount of same number of employees, 38 full-time and 2 part-time. Are we going to have some funds not forgiven because we don't have 40 full-time?
Remember from the preceding part of the webinar that what you put on the application is not what's going to be compared for forgiveness, because what you were technically supposed to put on the application, I'll own it. We even screwed this up. We did it on an average FTE basis instead of belly buttons. So either way, we still would have qualified. But the forgiveness piece is going to be based on math. So in that case, it doesn't matter what you put on the application. You're going to go back and calculate what are my full-time equivalents under whatever period I want to test against, which is just an hours-based calculation. So you need to start getting to, unless I screwed up the application, did what we did, which is used a full-time equivalent calculation, you can throw out what you put on the form. You're going to go back and calculate average FTEs for the purposes of forgiveness. So in your case, it's not belly buttons, it's average FTEs. That's all you're looking for. And that's, again, full-time people, count them out of the equation, add up all the part-time people's hours, divide by 120 or 160. That's your fractional piece. And then compare that back to whatever either the period that you applied against, meaning all of 2019 in most cases, the 2/15 to 6/30 2019, or January and February this year.
This is from Melissa. Which of these do you think have potential to be included in utilities, all of which are monthly fees? Copier, water filtration machine, coffee service includes equipment, postage machine, expense payment service, IT service company, software service. Licenses.
There might be an element of the IT company, like ours includes the expenses associated with the data center to keep this place going. So I could see a case for that. Coffee, postage, I wouldn't count on that.
All right, this is from Cheryl. Sorry, I sent this too soon. I received money on April 22nd, and I understand I only have 8 weeks after that. I can't get my W-2 payroll back up to the application level until I replace my team, which requires new hires and onboarding. How can I address this? I'm ready and willing to hire and add this back to payroll, but feel a little trapped for now. Is there a recommended approach you could suggest?
I mean, there's not really anything that you can do if you're trying to maximize forgiveness other than to hire the people back or hire some new people or whatever it's going to take to get the count right. And going back to the original statement that if you put belly buttons on, you need to recalculate what that would have been is from an average FTE calculation standpoint. Not knowing who this is, I guess the other thing that we could hope for is that they do something around the seasonality piece, meaning that if I'm a restaurant, hospitality, or otherwise a business that by law can't open, then can I get granted some form of exception to try to get there? The only issue that I see with that, though, as I'm thinking about it out loud, is that the government's counter argument would be, yeah, but you had all the employees on payroll, or not on payroll, you had them on unemployment. So now you're basically just getting government covered payroll while you're still making money. So that's going to require some thought around how that would get implemented.
Okay, this one, pay attention to this one because it has some intricacies. So I own an S Corp, typically withhold an additional $2,500 in Fed and $500 in state from my biweekly paychecks in order to cover the quarterly taxes for the S Corp. I also maximize my 401k. Typically, my net biweekly paychecks are under $1,000, and I take company distributions. I would not be able to take distributions for a while, or I will not. With the PPP loan, would I still need to take additional federal and state withholdings for the company? My goal is to have a net pay if possible. Hope this question makes sense. Thanks for all you guys are doing.
Well, for the purposes of the calculation, gross pay is what matters. So that is your net pay plus the additional plus your federal and state withholding, even if it's an additional amount. And if your business is down, you don't really need to do that anyway, because the reason you're doing that is to cover the distributions that you're taking from the profit that you're making. So in this case, I would just put myself on payroll for, again, assuming that you were making $100,000 between salary and distributions, just making that number up to keep the math simple. I pay myself the annualized equivalent of $100,000, and whatever the calculation is on the payroll component itself in terms of the withholding amount, I would just let it calculate that way, not do anything additional.
All right, next question. Do benefits include LTD and life insurance? Can we include interest paid for stock reduction?
No. And when I say that, since long-term disability and life insurance were not included in the initial loan request amount, I can't believe that they're going to be in the forgiveness piece. So on the interest on the stock redemption, the interest is forgivable. Interest expense is forgivable under the 25% component, but only if it's secured by real or personal property. So that's stuff that you pay property taxes on. So I can't see that that's going to be allowable at this point.
All right, this is from Mike, and he says, FYI, if you applied for EIDL early on with the original application, our application numbers start with 20 as opposed to 36, and did not reapply after they created the simplified application, you are probably out of luck. We are. We applied, or we have application numbers that we submitted in their system, but got a message yesterday to reapply from the portal, which we're not able to do at this point due to lapse of funding, since they aren't allowing new applications. So basically our EIDL application that was submitted early is lost in the system. I called and talked to a tier 2 rep who was unable to find our application. So it looks like we're out of luck, probably in the same boat as others.
Yeah.
Next question is from Robert. Our banker at Southern First Bank reports that Southern First is submitting PPP applications for non-customers and customers. Her name is Tracy Smith. T. Smith at southernfirst.com. She got us funded in round 2. All right, that's good to know, Robert. Thanks. And again, that was Tracy Smith, T. Smith at southernfirst.com. Appreciate that. Next question, guidance or instructions whether to use 30 hours or 40 hours in FTE calculation, from Christine.
I mean, it doesn't really matter because it's the same basis. So it doesn't matter if it's 30 or if it's 40, because you're comparing 2 periods. So you just got to be consistent in the period comparison. Meaning, like, going back, it doesn't matter what I put on my application if I counted belly buttons or if I used average FTEs like we did. In our case, we used the 40-hour work week calculation, But if we modified it to 30, then it just means that the count would be different for my test period too. So it actually really doesn't matter. The only people that would potentially impact would be people north of 500.
All right, for FTE math forgiveness to be 100%, do I count belly buttons for each payroll March 2019 to April 2020, and then take the average number of belly buttons from these payrolls to come up with the average, with the number of employees I need to get to 100% on forgiveness?
Again, it's average, meaning average full-time equivalence, which is an hours-based calculation. So literally, for everybody that's kind of wondering about this, calculate your 3 periods, whatever you submitted under, or 2/15/2019 through 6/30/2019, or January and February 2020, using hey, full-time people, they're full-time, count them out of the calculation, take up the part-timer hours, divide them by 120 or 160. It doesn't matter as long as you're just consistent. And then compare that to, that's your number. And you're going to pick the lowest of that number. That's what you're going to want to look to be at on an average basis through your 8-week period or 56-day period. And if you're not, then you need to be at the belly buttons.
All right, time check. We're at 12:01. We still have 4 open questions, so we're going to continue to roll. And if somebody has to bow out, go to BGW CPA YouTube channel. This entire broadcast will be posted later on this afternoon. Next question is from Edward. Let's assume my average FTE count at the benchmark period is 10, and at the end of the 8 weeks, it's 9. My understanding is that my loan forgiveness is limited to 90% of the loan amount. Is that correct?
Yep.
From Miriam, I received an email telling me I was fully, approved, and that I would get a confirmation on Monday. I did not hear from them yet with my loan ID. What do you suggest? I'd ask them for what's the SBA loan number.
Yeah, I'd agree.
Okay, Melissa, you said that we don't have to rehire the same people. Does this apply to the calculation of reduction of loan forgiveness that says to reduce forgiveness for an application, employees whose wages have declined more than 25%? We have significant churn in our employee headcount and mix. Say we have 30 people who are no longer employed by us and 20 new employees have been hired. How do we go about determining whether employees have suffered a greater than 25% reduction in pay when the employee mix has changed so much?
I think that only applies to people that were on, again, there's no guidance, but I think that only applies to people that were on payroll with you prior to February 15th, meaning like they were on your February 15th payroll, up to April 27th. So I think that's your window of reduction to look at, is February 15th to April 27th. Not, 2019, not January. I think that's the window that you're going to want to compare against. And if somebody left due to churn from that standpoint and they're replaced, it is what it is. I don't think that you can make a case that if the person that was replaced is at a lower salary than the person that left, I don't think that doesn't seem like that would matter, because you didn't reduce anybody.
All right, looks like this is the last question unless somebody wants to fire us another one. All right, so that's all I had to say. We got another one. So second to last question is how the loan forgiveness calculation works if for the 7.5 weeks we had 2 employees less than the testing period, and in the last week we hired 2 employees back. Do they take the average of 8 weeks or the number of FTEs at the last payroll?
Well, in this case, you fail the average test, so you're going for the exception, and the exception is you have the count back. So that's what would end up happening in this case.
All right, last question here. Sorry to ask again. Do I just need to have 100% of employees back on the last payroll to be forgiven 100%?
That's the way we're reading it now, because you would have qualified for the exception at that amount. That's, assuming that you've actually spent the money in a qualified way.
All right, we got another question that just popped up here. Let's see. Oh, it's just a thank you. You bet. Any other questions out there? And if not, any parting thoughts or wisdom from you, Adam?
Yeah, I know people are kind of scrambling with what do I do, right now in terms of the money, and what's going to be the amount that's forgiven versus hanging out there as a loan. I think all of that is a useful exercise. At the same time, we don't really know exactly what's going to happen in terms of the guidance of cash versus accrual-based accounting. So I really would just encourage everybody to be thinking through, all right, I may need to change something. And if I needed to change something, this is what I would change in terms of an additional payroll or whatever, or a bonus or whatever you need to do. I just wouldn't do anything different right now until some more guidance comes out. I would be prepared and do some scenario planning on what I would have to do, but I wouldn't actually do anything with it until we get a little bit more guidance.
All right, awesome. As usual, Adam, you did a great job. We had just about 120 people on this call. So the questions continue to mount as the ambiguity continues to ride along. So thanks again. We'll be probably back here on the same bat channel next week on Tuesday and Thursday. So thanks again, Adam. You did a great job.
All right. Thanks, Gary. Appreciate it. See you guys.
See ya. Bye.